What's up everyone, it's Scotty with MoneyVest. So in today's video, we are going to be talking about ASML, one of the top stocks in the semiconductor sector and of course the chip industry. I am traveling at the moment, so I did come to Manchester to kind of meet my friends and watch a few games. So for the next few days, I will be over here in a new setup without, of course, the best quality microphone or the best quality video, but I'll still try to keep the content quality up. So we're going to be talking about a very, very nice stock here that we have talked about on the channel before. I did profit a little bit over 40% on this stock. Originally, when I was buying in the 500s, 600s, it did really well, and it's now up over 100% from those levels when we were originally talking about this company, ASML. And I wanted to give you a little bit of an update on where we are with this company. So as always, if you enjoy this video and find it helpful, make sure that you drop a like and don't forget to subscribe to the channel. And also links to our Discord and Patreon is going to be down below if you are interested in joining. And there is a 16% annual discount that's available until the end of this month. So just one more day left. March 31st, quite tonight, literally is the last day. If you want to take advantage of that discount, there's a few more spots left as well. Now, before we move over to the fundamentals and of course the fair value calculation here, let's talk about what ASML really does for anybody who doesn't know or does need a refresher. Now, ASML is not a company that actually produces chips. They're not a semiconductor stock, meaning they're not the ones that actually make the end product. They don't make chips or semiconductors or integrated circuits. But what they actually do is essentially create the manufacturing or essentially the equipment, right? So it's the world's leading manufacturer of chip making equipment called lithography machines that are an essential component in a chip manufacturing. So essentially what they do is they produce the equipment to produce chips. Okay, so as you can see that this right here are some of the biggest manufacturing lithography equipment that ASML basically produces, and you would think who would be the customer, right? Who would be the one actually buying these lithography equipments? Yes, the end user is of course the fab and again foundries here. We're talking Intel. More importantly, we're talking about TSMC, who is ASML's largest customer, right? TSMC is quite literally the largest customer for ASML, so their businesses are quite correlated with each other. Not to mention Intel also being a very, very significant portion of the overall pie here, as Intel is also investing heavily in the chip space, or of course in the US as well, to become a fab and a foundry. Now, this right here is my alert from January 30th, 2024. So at the beginning of this year, basically trimmed about half of my position at a 40% profit. So again, did incredibly well. A lot of our community members are still holding on to ASML. They profited really, really significant amounts of money when it comes to this company because, again, the growth has been just phenomenal. So if you come over to ASML, if you take a look at how well this stock has really performed, I mean, year to date, this stock is up a little bit over 33%, not to mention since October of last year, the stock is up over a whopping 73%. So again, if you want to get access to a lot of these alerts that I do send out, and I do focus on quality over quantity, I'm not going to, bombard you with a lot of alerts, but when I do send them, the probability for success is going to be really high. As we had a very nice recent trade on Google, we've had a trade on Enphase that is still going on right now. And Apple also, as we've already discussed in our previous videos and in our Discord as well, which is now trading at a very nice good value from a tradable perspective. So again, link's going to be down below with that 16% annual discount available. Now, this right here in terms of the market share and total addressable market. So ASML shared that they believe that the semiconductor end market will grow at a rate of about 9% annually, and that's from 2020 to 2030. For those keeping track, this would mean a semiconductor sales in 2025 would exceed 700 billion, and by 2030 that would reach 1.1 trillion dollars. That actually might be a little bit on the lower end because this report came out before we had so much involvement with artificial intelligence. And compare this to Tech Insights at 1 trillion, McKinsey at 1.1, and Semi at 1.3 trillion. The highlights are that wafer capacity grows by 780,000 wafer starts per month, or WPM, at a CAGR of 6.5%. So this right here is going to be broken down by different growth end markets. So what you'll notice is the total, we're looking at 7.4 to 8.9% CAGR all the way from 2026 to 2030 and 2022 to 2030, 7.4%. Then if you, of course, break it down by smartphones, personal computing, consumer electronics, wired and wireless, servers, data center and storage, automotive and industrial electronics, we're looking at some pretty solid growth rates, anywhere between 5 to as much as 8.6, 8.7%. Over here, 6.4, 12.9. So server, data center, and storage. This is where NVIDIA lives. This is where NVIDIA is. This is where AMD is. So a lot of those chip designers kind of belong to this high growing market over here. Automotive, of course, NVIDIA and AMD are also part of the automotive market, including Qualcomm. And we got industrial electronics also growing at 10.5 to as much as 12.2%, with consumer electronics also growing at over 6.1 to 8.6%. So without a doubt, there's going to be a significant amount of demand for chips and semiconductors, and ASML again is at the forefront of this ecosystem to kind of build that technology to allow companies to build further those chips and manufacture those chips as well. And when it comes to revenues, I mean, this is one of the reasons why ASML was so attractive from the beginning for myself, is because if you take a look at revenues from $7 billion to over $30 billion for the company, and gross profit has gone from $3 billion to over $15.6 billion. So 5x growth in gross profit. Bottom line here, absolute consistency, as you can see over here. And this right here, also just a phenomenal amount of growth here in revenue as well. Operating income from 1.8 billion to well over 9.9, almost $10 billion for the company. Again, we're looking at very nice, solid consistency here. And bottom line net income has gone from 1.7 to over $8.65 billion. And shares outstanding is rather flat, from 439 million down to 394 million shares as well. So share buybacks, revenue growth, operating profit, gross profit, and net income profit, everything else growing in the right direction. If you come over to profitability, so margins, we're looking at 32%, so 32% EBITDA margin, 35% EBITDA margin, 51% gross margins, despite being a capital-intensive manufacturing equipment company. 51% gross margins, absolutely phenomenal, not to mention net margins of 28%. So this again is absolutely incredible here. Return on total common equity, return on assets, and total capital, phenomenal here. And then if you come down to profit per share, $214,000, which is increased from $170,000, right? So it's gone from $170,000 to $214,000, which again shows efficiency, and the company's growing profit per share, which again is a very, very good sign. Now, if you come over to earnings expectations, so this right here is going to be those numbers growing from about $20 to as much as $85 per share. And we are looking at some pretty solid growth rates. Starting at 2025, we're looking at 47%, 19%, 19%, 13%, 18%, 15.5%, 12.5%, 10.5%. So again, very solid growth rate expected from the business. So if you do some very simple math here, financials, so $20.56. Net income is sitting at around, or actually shares outstanding, I should say, sitting around 394. So 394 times 2056, we're looking at a net income of $8.1 billion, right? So 8.1 billion is going to be that number. We're doing a 10-year analysis. So 8.1 billion for ASML is what we're going to plug in. Now, in terms of that growth rate, again, we can go a little bit more conservative. We can go with about 14, 12.5, maybe 14%, in and around those levels. Now, when it comes to valuation for ASML, it is extremely high. That is actually one of the reasons why I was more interested in, let's say, trimming my position, kind of lighting up on that position, de-risking a little bit, because it's trading at a 44 to 45 times earnings multiple with a PEG ratio of non-GAAP forward basis of over 2. 2 PEG ratio, again, signifies that the stock is overvalued compared to its growth rate. And then if you come down to price to sales, we're looking at 12.5, 12.4, with price to cash flow sitting at 39 to as much as 63 for the company as well. So very, very, very high price to cash flow, not to mention some of the other metrics over here, also very, very rich for the company here as well. If you come over to the balance sheet, again, balance sheet's phenomenal, so we can kind of skip over that part. But really, if you take a look at the cash over debt, we're looking at plenty of cash, $7.7 billion, with debt sitting at 5.5, so negative net debt, so meaning the company has got more cash than debt on the balance sheet, with a current ratio of over 1.5, and debt to free cash flow is a little bit on the higher side, but I let that slide because the company has more cash than debt on the balance sheet at the end of the day. So, obviously right now the valuation is too expensive. It is trading at over 40, 45 times earnings multiple. If I go with, let's say, 25 over here, 12% discount rate, 10% margin of safety, and about 3% share dilution buyback, basically 3% share buyback, we're looking at a fair value of about $809 per share. And this is about a 10-year analysis, and this is about as optimistic as I can be on ASML, with the future price target sitting at just under $2,800 for the company, right? So that is quite a significant potential for gain, because if you come over to where the stock is today, it's trading at just over $970, and getting up to over $2,800, we're looking at a price target of well over 190% gain over 10 years if this market continues to grow as expected. And this right here is going to be that sensitivity grid where you can take a look that, okay, at a slightly lower growth rate and slightly lower P multiple, what's going to be that intrinsic value for ASML. So if we go with, let's say, a 12% growth rate and a 20 times P multiple, now all of a sudden we need a 44% drop for ASML with a fair value of $542 and a price target of close to just under $1,900. But even at 1872, that is a doubling in price over 10 years. That's going to go from $900 to over $1,800. So that's basically a 100% return, even at current prices. But of course, that's going to be over 10 years out for ASML. And that's only applying a 12% growth rate, meaning that ASML needs to hit a 12% growth rate, demand a 20 times P multiple, which is significantly lower, more than half of what it is right now. And then it's trading at just over $1,872 price target 10 years out with a fair value of just over 542. And that's only if you need a market beating return over a 10-year period, right? So 10-year period meaning that we're going to be, because over 10 years, doubling your money is actually a lower rate of return compared to the S&P 500, which generating an 8% return is going to double your money every 7 years. So 3 years extra that ASML is going to take to double your money, considering if you invest at today's prices, and ASML is able to hit those very simple 12% growth rate with a 20 times P multiple that it's demanding. So let me know your thoughts down in the comment section below. And for me, myself, I would be a lot more interested in ASML once again, let's say in the $600 to $700 range. That's only because if I go with, let's say, 13% and a slightly higher 22 times P multiple, we're looking at $650. That is not, in my opinion, super expensive or overvalued. But yes, it is still not conservative, but it would still be, somewhat reasonably priced at those levels, considering that the valuation would be a lot better than where it is trading at the moment. This right here is the entire technical analysis in this breakdown. Of course, it was an immediate buy, it was a no-brainer buy in the 500s. Since then, it's up over 70%. But of course, if it does end up, let's say, selling off, I'd be looking at that 200 simple moving average in the 700s all the way down to in the mid 600s over here 650s for ASML as well. So those right there are going to be some levels to keep in mind for the company moving forward. So hope you all enjoy this video, and again, let me know your thoughts down in the comment section below, and what do you think about ASML, and what are you planning to do? Are you buying, selling, or holding this stock? I would love to know from you guys. As always, if you enjoyed it, found it helpful, make sure that you drop a like, subscribe to the channel, and happy investing. I'll see you all in the next video.